Yo, 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 what's good? Alright, man, things are pretty messed up here, man, with the internet. I'd love to fix my mother's internet, but she won't allow me to install Virgin Media. Straight up. She won't let it happen. So I can't fight the beast. So we have to deal with what we deal with. Okay, this is a bit of a weird week for me anyway, so we don't normally chill here, but don't worry. I'm going to slap in a lease line at her premises. She ain't going to know what's come. So, yeah. Anyways, what's going on, guys? What is happening? How are you all doing? Let me just wait for the... If any of you can kindly share this into the Discord. What's good, Twisted Turnings, man? How you doing, bro? How are you all doing, guys? Also, patrons, listen. One of the first stage videos that I recorded today is taking 3.5 hours to upload to YouTube. So yeah, that's how pretty bad the internet is. Okay, so I'm going to wait until I get back home tomorrow and I will upload them all, and they will literally take 20 minutes. So because I'm not doing anything tomorrow stream wise, I'm not going online as such. I'll stream in the evening and then we'll have the podcast. So I'll get those videos over to you as soon as possible in the morning, all right, when I get back. So we'll take it from there. But other than that, guys, how are we all tonight? I hope everyone's all good. Driver's Room, Solange, Atai, Anthony V, Stormtrooper Bex, how we doing? Dozer, what's good, my man? Cool. How you doing, Crypto Keeper? 160% profits today. Happy days. Vanja, evening. How you doing? Ian. Yo, Mike Dutch. What's good? All good now, yeah. Yeah. Yorkshire Reefer, what's going on? Famous. Who else is in here? PC Shed. Are you in here, my friend? Joan Blank, Moondog, Bitcoin 20k. I'll tell you what, guys. I spoke to a gentleman earlier on. Alright. This guy has probably got, hands down, the most flawless risk management strategy that there is. Alright. Before we go into the chart, I know my guy is sat here listening, and I will introduce him to all of you, and you guys know who he is. But I think this is a fantastic risk strategy. All right. So in order to maintain the novelty of discipline in trading, the best thing you can do. Now, this is the sweet thing about this strategy, guys. And when I heard the guy explain it to me, I was like, boy, this guy is onto something different. Okay. So just listen out. This guy said to me, pick a point in the chart where you think Bitcoin will never go and wait for it to get there. Then make your trade. I mean, that is hands down the best strategy ever. Infinex, please, I'd love you to really dive into that reality for me, because I'm mesmerized by that strategy, bro. That strategy right there is the shit. Right there. I mean, come on, man. That's like the best strategy. There he is. Come at me, bro. I mean, come on, man. That is like a brilliant strategy. Think about it. Pick a point in the chart where you never think it will go and wait for price to get there. That's the best risk management. That makes a stable coin look volatile. You know? All right, then. Nah, guys, come on, man. Come on. You can't think that I'm being serious. All right, it's just a bit of a laugh and a joke. All right, cool. Stephanie, how you doing? It's been a while. Yeah, price could go anywhere. Oh, man. What's good, Sack Trades, PC? What is happening, my friend? PC Shed, where you at, man? All right, then, guys. Let's get to it, man. Let's have a conversation. Yo, Mike, I don't think this has been shared in the Discord. I've noticed that sometimes it doesn't actually share it into the new content tab. So if you wouldn't mind letting those guys know, unless it already has shared it. Hey, hi. I mentioned a way that I think those scammers could Discord has something to do with the JavaScript and special characters used in their names. Infinex, you hear this? Scammers copied the Discord tag, something to do with the JavaScript and special characters, but apparently you need... Yeah, well, anyway, forget it. Let's hopefully it doesn't happen again. Remember, I won't ever contact anyone, all right? If anyone contacts you using my name or Discord tag, just know that it's a scammer, all right? So for anybody new in the Discord, just know that it's not me. I will never communicate with anyone unless you guys communicate to me first, and it's something important. I will then respond to you and take it from there, all right? So here we go. Let's have a conversation. Let me flip the chart over. Bitcoin. So Bitcoin has had a pretty boring day today, right? Nothing much has been happening on the chart, okay? We've been trailing around the psychological high, all right? And earlier on today with the patrons in the chat, as we anticipated, Bitcoin has actually now come back and recovered all of that green vector candle and some, okay? Look at the projection zone, came all the way down. Now, there was another vector point in the chart, but on the 15-minute time frame, okay? And that was right here. That little vector candle right there. Just look at how they they came down, wicked it, and then moved all the way back up. All right? Really important that is, guys, that they came back to that point. That was a previous consolidation point from last week when they made the move higher. Okay? What are we expecting? Well, it's all down to how long these market makers want to keep price at this zone. Because firstly, the 200 EMA on the 50-minute time frame has crossed over the 800. Right? The 50 EMA is sharp down, near enough vertical. All right? Now, if you zoom in, the 13 EMA, all right, is now below price. So things may be changing. But we need the price to trail higher, and we need the 13 and the 5 to cross over the 50 EMA to establish that price is moving upwards. All right? On the 1 hour time frame, things are also different. Okay? Prices within the 13 and the 5 EMA. Okay? And it's stabilizing at the psychological high. For me, if they did want to send price lower, they would have brought price even further down. But this big stopping volume candle, guys, this huge candle right here is the clue that they may be finished in this zone. All right? If you look at the RSI itself, you can see that you've got divergence at the pin of this stopping volume candle. Look at it. Bring price up there. RSI outside the volatility band right here, back inside the volatility, and you've even got a small W formation forming. Okay, now price is starting to edge higher. It needs to break above the market base and then make its way towards the volatility band. But you see the volatility bands, look at how there is curvature here, all right, and there's nothing now. So price is now stalling. Okay, it's not gone anywhere. And it stayed in and around the psychological high. That's good news for us, because that is going to determine the true support at this chart right now. Okay? Now, has there been any news today that has triggered this move to the downside? Who knows? Right? I don't know if there has been any news released, but all I do know is if they stabilize price and by holding the psychological high right now with the stopping volume candle right here, then price is going to start turning upwards. Now, on the hour time frame, there is a cross. Now, will this cross play out? Well, it's too early to assume. Because the first thing you need to establish when you're dealing with death crosses, golden crosses, is you really want the moving averages to expand away from each other before you can actually agree that that is going to be a cross of a certain moving average. Principally, it has crossed. Traders trade simply on the cross of the average, and then they wait to see if it plays out. That's a bit of a bit of a bad strategy to have, because you need confirmation. All right, you need confirmation that when price is vectoring to the downside, you want to see the next vector candle to confirm that, or a confirmation candle to imply that yes, they do favor lower prices. Okay, so if you think that this is going to be a death cross, wait for it to expand, because then what you want is the 50 EMA to point even further downwards to solidify the momentum. And then you want, see that there? Did you see how price just moved forwards, and so did the EMAs? 200 EMAs expanded out slightly, but it's not moved out of the band of the 50 EMA. This cloud around the 50 EMA acts as like a volatility band. All right? When price clears that, then you know you've got volatility. Right now, price has moved away from the 50 moving average, and now it's looking to try and come back. So we're going to know where we stand with Sydney and Tokyo and Hong Kong this evening. Okay? And the thing for me is this. If we consider the cycles themselves, okay? If we base it on this being an M formation, drop level 1, drop level 2, by principle, we are expecting price to come down lower. Maybe we might get price retracing all the way back up towards the 50 EMA, recovering of this red vector candle, then move down lower, and then come Friday, they consolidate in and around this point. They've recovered the previous vector down here, and then when you zoom out, you will then see that it will be deemed as the first pullback, excuse me, the first pullback of this big W formation. Now, the pattern itself is still valid. If Bitcoin comes down to 32K, still valid. 31,200, still valid. 30,000, still valid. 29,857, still valid. All right? It's only invalidated when Bitcoin breaks below the 28,908. Well, actually, when it breaks below the 28,769. That is when the pattern will be invalidated. All right? However, true invalidation is when price actually breaks away from the first leg of the W formation. Invalidation for me will be price coming down towards the 27,764 zone. Okay? Because what it can do is it can come all the way back down here, and it can spike below the first leg and then come straight back up. That will still be deemed as a valid pattern, but it would have to recover quite drastically back to the upside, no different to what you saw here. Look at this. All right, where this dropped down to was at a very critical point in the chart. The sheer fact that volume came in and around this zone tells me that we are effectively waiting to see if this is the point where these guys decide to move price higher, or are we going to wait and see if they retrace back up to the 50 to regulate the momentum and bring things back into the fray, and then bring price all the way back down to test the commitment of traders down here? This is a liquidity pool that may be seen, okay? But we are in a bigger W formation. This is deemed as the first pullback, the first proper pullback. Now, some would see it as a reset, okay? Because it actually has come back down, but we are looking at a bigger pattern. So this is valid as a drop level 1 rise. That's what we're waiting for. All right? Because if you go onto the 4-hour time frame, okay, look, you can see it's just a nice standard move down. That's all it is. It's the first pullback of the W formation. Some of the stock traders will probably understand this, but this looks like a nice valid cup with handle formation. Cup with handle, consolidation, building the orders, coming out of the zone. This is the tip of the cup. This is the handle, first pullback, rising back up. That's exactly what a cup with handle formation is. William J. O'Neill, you know, the creator of Investors Business Daily. I used to watch that platform. I remember when it became a website, right? I was in on that website a good 15 years ago, all right? And just how it has evolved is unbelievable, all right? Now, William J. O'Neill is probably one of the most greatest stock traders out there. And he came up with the concept of CANSLIM. All right, it's an acronym for considering certain factors in order for you to determine whether or not a stock is valid. So it talks about current earnings. Is the quarterly earnings showing acceleration above 15-16%? Is it accelerated? Price earnings per share, the price itself, the pattern in the chart, what's the weekly time frame doing against the daily time frame. The canceling method is really down to trading on the weekly time frame. All right, so you can imagine, this guy would make thousands of percent return, okay, because he was trading off the weekly time frame. He would be grabbing market turns, and I'm talking serious market turns. So check that guy out. If you're into stocks, check out the canceling method. It is a valid thing. Well, yeah, 10 years ago, what? 2000 and what was it? 10 years ago, where we at? 2011, of course we had internet. 2007, yeah, of course we had internet. It was slow. Back in the days of MSN Messenger, back then. I used the internet differently back then, man. What's good, Gula Jama? Toronto, what's happening? Yeah, that's old school. Old school. Napster, yeah, man. Chatty, how you doing, bro? That guy's William J. O'Neill. Okay, I think it was Joseph. William Joseph O'Neill. That was his name. Yahoo chat rooms, my day. LimeWire, bro. Back in the day. I know, Metallica. I can't believe it, man. I know. Okay, then. So, this is where we are right now. This is the 4-hour time frame. Stabilizing around the psychological high. That's really important for us, guys. But just look at that vector recovery right there. Just pay attention to that, please. Train your eyes. This is how the vectors get validated. It's no coincidence that that wick that happened earlier on today, right here, happens to be near enough at the start of that candle. It's frightening, isn't it? And I pull this up every stream, every time I find one. All right. Now, do you understand about the vector candles when we say that, it's likely price? When it's near a vector, it's likely to recover it. And when it recovers it, it installs the intention. The fact that they bounce straight away from this point tells me that the market maker does favor higher prices. All right. Look at these red vectors. 1, 2, 3, push down, shift out of the zone, complete recovery of the vector candle. Okay, where we are right now, I mean, the 50 EMA is pretty, well, there's no clear direction. The 13 and the 5 are pretty, wide, so we're expecting a retrace back in. The RSI is within the volatility band, okay? So we're not really seeing aggression to the downside. It's not an aggressive move down, okay? A lot of our work is done on the 1-hour time frame, though, okay? So this is where we are. The key thing for me is the stopping volume. That right there is the clue to tell me that the market makers wanted to grab the liquidity to the downside and shift back up. All right. Bullish divergence at the lows. Confluence above the psychological high. Stopping volume. Vector candle. Prices away from the 50 EMA. Reversal back up. That is what and how you develop confluences, okay? That's how you do it. Flipping over to Ethereum, what's her story? Ethereum's doing brilliant. She's actually shown a W formation on the 30-minute time frame. Flip over to the hourly. You can see a very small W formation happening at the 200 EMA. She's trading very strong. Very strong. She'll come back up towards this vector candle right here. As long as she breaks the 50 EMA, The 5 and the 13 EMA are now crossing and edging upwards, which is going to be great because we need the 13 EMA to cross over the 1 hour time frame on the 50 EMA to solidify that they are going to move price back up. Friday may be a run for profit, guys. No joke. Friday may be a run for profit. It'll be very interesting to see that. Absolute madness if that happens. Okay, let's have a conversation. All right, next thing. Let's have a look at XRP. XRP is technically really well. Look, first pull back out of the W formation, shift out the zone, hit the projection point, come all the way back. Now we are waiting for a simple rise back up. And the thing is, guys, look, stopping volume on the candlestick right there. Everything is stacked to the upside because the move has been very controlled to the downside. It's not been a crazy move. I mean, Bitcoin is just doing what she does best. Not the chart I want. Yeah. So these are the projection points that have been recovered. Don't need that. Don't need that. The next point in the chart is here. This red vector. They came back, recovered about a third of it. Now we're waiting to see if this is going to be the retrace back towards the 50. If it hits the 50, that's where we will have our decisions. This is where we will know that they will bring price back down if it rejects the 50 EMA. Okay, because the M1 pivot is holding very well. Okay, so if the M1 pivot holds, we understand that the M1 pivot will imply that the M3 will be taken out. Okay, which will bring us towards yesterday's daily open. So this move to the downside, it is a fast move. Okay, just to get price back into the zone to recover the previous vector candles over here, get their obligation from their orders, and then start the whole process again. This is what we're waiting for. What does run for profit mean? No, run for profit effectively means when the market maker traps all the liquidity in one point. So if you look at price right here, okay, look at this W formation. When the market maker is building a position in this zone, okay, he needs to make a run for profit, as in get out of the zone, because if he stays too long in this area here, the retail trader will be then coming with a massive bag of orders that he will need to fulfill. He's obligated to create liquidity in the marketplace. That's why you see aggressive behavior at lows, climatic candles at lows and at highs, because if he continues to keep raising price, all right, then the moon boy is going to step in and he's going to be pumping it like crazy. The market maker will then be in the red because he has an obligation to fulfill those orders. That is the requirement of the market maker. He makes the market. The market maker's not going to stop giving money away or fulfilling orders because he doesn't want to see the red. What he does is he stops price from getting there. He controls the liquidity because he'll have more money to give at a point where he wants to stop it, as opposed to a point in the chart when there's too much liquidity coming in by the retail trader that he can't deny or not accept, because he will literally mess the market up. All right. So that's what's really important to understand, which is this is how you're able to see the turns in a chart. All right. Because if the market maker allows the moon boy to realize a profit to the upside or to the downside, he releases liquidity and then he has to fulfill that obligation. Market maker's in the red and he's not in this business to see red. Granted, he can be in a negative position for as long as he wants. He can be as irrational as he wants. All right. We can't, but he can. But he's not going to expose himself to those situations, because at some point in the chart, he's going to return price back up or back down to fulfill his commitment in the chart. Okay. If you guys are wanting to know who makes the music on the stream, go to this guy called Ed Poster on Instagram. Hit him up. The guy's a fantastic artist, man. How did Bitcoin come up from 3K all the way to 65 then? Simple. Rise, retrace, continuation. Give people the idea it's rising. okay? Take out their orders on the way back down, take out their stops, use that liquidity to build longs, create the illusion that it's still going to rise again, get the retail trader to commit again, rise up, retrace, rise up, retrace. That is the cycle, okay? That is hands down the cycle. I've been asked to ask you all, how many of you trade full time? Please type 1 if you are all trading, if anybody's trading full time. This is interesting. There's your answer. I'll take 1.5. Trying to be full time. One, but I got a job as well and I sleep 5 hours on average. Fair play to you, bro. Don't make 5 times my salary yet. You're just curious. Samia, okay, cool. There you go. There's your answer. Hodl over 9,000. I had this conversation earlier on with the Patreons, guys. All right. I had the conversation where, you know, the expectations of someone that comes into this game wanting to trade full time. Do you understand the commitment that is required to trade full time? Okay. And there are YouTubers out there that have taken the piss out of the 9 to 5, and they've condemned it. They said it's a slave thing. All right. Well, if you're thinking that people who work 9 to 5 have got limiting beliefs, you're just as big of a limiting belief if you believe that the 9 to 5 is a bad thing. Okay? Any decent trader will tell you that it's about creating multiple sources of income. Why? Because if trading was 100% guaranteed, you would not need to go work elsewhere. You would not even think about creating another source of income. Okay? But that's not what trading is. All right? Trading has variance. You understand variance, okay? You'll understand what trading is about. All right? There are 2 types of trading, okay? You can trade money for money, or you can trade time for money. 9 to 5, you trade time for money. That's a guaranteed trade. And then you come to this game of speculation and you're trading money with money for money, and there's a chance that you can lose it. All right? See, the funny thing is people don't put time down as a currency, and a lot of people are more conscious about money wasted as opposed to time wasted. I think now people are starting to edge to the idea that time is a currency, time is a commodity. All right? You know, ask anyone in their old age what more could they have? They will tell you they would want more time. Yeah? Now, when you're doing a 9 to 5, you're guaranteeing yourself an income. You can come to trading, you can put £1,000 in. If you lose that £1,000, no problem. You've got a 9 to 5, you can work and save up again. That's the insurance that you have. Okay? But there are people that I've known that have actually sold all their possessions and gone full-time into trading because they like the idea of being able to say they trade full-time, but they don't like it. If you trade full-time and say, for example, you sell everything and you've got £50,000. You come to the trading desk, your first day of trading, you make yourself $500. Happy days. You are happy as Larry. You know, life is brilliant. The next day, you take a loss of $2,000. You're not so great now, are you? Your 50K is now 48. Then you try and grow it back to 50K. And then by the time you get it towards 50K, guess what? You need to pay the bills. Let's take out another $3,000. Ouch. So now your new balance is what? 47. Guess what? You start trading, you lose another $3,000. Back down to 44,000. Trying to get back to 50,000. You only managed to get back to 48. Guess what? The month has gone. You're still at square one. You need to pull out another 3,000. Okay, so now you're down to 45. What happens? You start going through this psychological barrier of money. You can't get over 50K. And you've got the pressure of trying to make sure that you are not using your capital to pay for your bills, but profits that you've earned in your trading. Then you start pushing yourself to take bigger trades so that you can earn more money quicker. Then you start losing more money quicker. When you've gone full time, you are by yourself. And the worst thing about it is when you've got a family to support, siblings around you, people relying on you, you tell them the bullshit story. You sit and say to them, yeah, trading's going fine. Actually, it's all good. Yeah, I've got everything set up for this month. I've got the bills covered this month. You know, everything's all good. But deep down, you are screaming like a child. You are scared to death because you are taking hits. But if you have another source of income, like a 9-to-5 or even a night job, you can go to that night job and reflect on your trading, knowing that you're going to earn yourself $400 or $500 from that job. It's a peace of mind. Ask any trader, man, they'll tell you. Multiple sources of income. Multiple. You need it because trading is not sustainable unless you have liquidity. Okay? Do not, I mean, you know, they say that a true swing trader, for a swing trader really to be earning money comfortably and not have to worry about anything, he needs about $500,000 or even $250,000 in and between that range as a swing trader. Why? Because a swing trader is going to be holding trades longer and he's going to be sitting through more drawdown than anyone else. Okay? Got to be careful. That's what it is. There you go. And with trade, if you were to apply this strategy, okay, as a full-time trader, well, you'd be able to go out and work Monday, Friday, Saturday. Because this strategy works fantastic at the most busiest times of the week. Tuesday, Wednesday, Thursday. Patreons, we are always busy on Tuesday, Wednesday, Thursday. Monday, false move week beginning. Friday, pretty much of a laggard day, boring. Nothing much happens unless news comes out and triggers price to go crazy. All right? At some point over the weekend, we're going to hear a tweet. Someone's going to say something. Or some news is going to get released. That's what Fridays are about. Saturday's exactly the same. Don't get caught up in that madness. All right? That's the cool thing. Yeah. Finding the right entries in more detail. I'll tell you what, you will never find the perfect entry. So that's the fundamental rule. You will never find the perfect entry. Get that out your mind. Because people that are new coming to this stream or coming into trading full stop, they're going to be looking for the perfect entry because they do not want to feel like they're making a mistake. And if you don't think you can't make a mistake, please come away from trading. All right? Please come away from trading. All right? Because you cannot think that trading is a simple thing and it has to be perfected. All right? Trading is articulate. Yes, it is an art form. It's an expression of your character in the realm of uncertainty. How do you behave when you don't know what's going to happen next? When our brains are naturally designed and wired to seek expectation and the safest result. When you give someone money, you expect something from it. When you come to this marketplace, you put down money. There's no guarantee you're going to get it back. The type of the majority of traders in Market Wizards. Okay, so the traders in Market Wizards are, a lot of those traders came from the pits. All right. Rugs 3 Crows, I agree. Yeah, a lot of those traders came from the trading pits in New York. All right. And they all have a story. You know, they all entered in the market when a lot of things changed. You know, massive market turns, but principally, you know, they all have one thing in common, all right? And they're all systematical. You know, when you're trading in the pits, yeah, the way you come to this chart, guys, and put an order, could you imagine trying to scream that order to the guy opposite? Trying to get your order filled. by shouting out, 35 cents to one, whatever. Saying all the numbers. Quarter. Give me 50. Give me 1,000. 1,000 at 10. 1,000 at 6. And shouting over people. That's how they used to trade. Now the pits are all digital. They just pull out the iPads and punch their orders. It's quite a quiet place. That's how a lot of those market wizards started. They didn't have MT4. They didn't have, Trading View. They only had the ticker on the wall, and that was it. Those market wizards have a different psychology, man. It was all commodities for them. Bororado, what's happened here, man? Well done, Bora, man. That's awesome, bro. That is awesome. Can you collectively bribe some crypto market makers to give us some daily insights on where they are intending to move the price that day? Guys, this platform that you're looking at right now is an ATM. They don't need to be bribed. The money that you come to a market maker with and say, hey, can you just give me a tip? He'll just look at you and be like, what is this guy talking about? Do you understand how much a tip is worth to me? Do you understand how big this marketplace is? Remember, each candlestick that forms has millions and billions of dollars behind it. All right? There is nothing that these market makers could be bribed with. This is their playground. This is where they just transfer money from the weak to the strong. That's it. This is from the fearful to the greedy. And they exploit both avenues. This is why there will always be a market, which is why if you've missed out on an opportunity, believe there will be another one. Because until you get rid of fear as an emotion and you get rid of greed as an emotion, you will then cease to have a marketplace. Price only rises because people fear what? Missing out. People what? Get greedy. Price drops because people are fearing it's going to continue to drop. Price continues to drop because people are getting greedy. Both of the emotions sit on both sides of the coin. Got wrecked for 25k in February, been a student ever since. Man, you must have been here from day one. Started the stream on the 21st of January. That's ill. And one thing as well, you physically can't get rid of emotions. I get emotional. But you can be aware of it. And having an awareness, okay, it lets you have the one step ahead. So by being aware that you can get all emotional, what can you put in place to avoid having to respond to that emotion? Because remember, emotions, okay, are biological triggers. Something biologically happens inside of you before it becomes an emotion. When you enter a trade and it's going against you, you start to palpitate, right? Your heart rate increases, you start to sweat, you get edgy, you feel, you start probably shaking, you're getting concerned. Then you become fearful. Biological triggers that kick off in the body that then are emitted as an emotion. So then when you start to sense that, you then know something is wrong. Come away from the chart, close the trade, get out, cut the loss, get rid of it. The only way that I could manage my expectations and my emotions, okay, was literally if I started to become emotional about a trade, I would cut it and change the direction. Because if I'm paying right now, I'm paying the price of being wrong. And the longer I stay in this trade, the longer I am wrong. Well, guess what? Let me change the direction of my trade and see how right I can be. Which takes me back to the old age saying in trading, which is good traders cut their losses, great traders change direction. That's not allowing emotions to get the better of you, because the moment you cut your trade, it's typical, isn't it? It always ends up going in your favor. That's a bit of a, it's all down to your tolerance of risk. How do you manage your expectations in the realm of uncertainty? How do you behave when you don't know what's going to happen next? Why are you fearful of something that you don't know exists? You can't be scared of nothing. If you walk into a room and it's empty, are you going to be scared that there's something there? Well, no, that's just you creating madness in your mind. You can't be scared of an outcome that you don't know what's going to become. Therefore, why would you put anything or put a conviction down and say that it's going to go here, guaranteed? What, to just satisfy the mind, to satisfy your mind, because we've been programmed to seek the safest option. Our minds naturally are geared to seek the safest option, all right? So we're just going to come up with an assumption that, yes, price is going to go there. You'll never know where price is going to go, guaranteed. So you have to be okay with that. But all you can do is trade what you see. What we see right now, Bitcoin is holding above this psychological high. It's trailing in and around on the Asian session mid-range, okay? We've got vector candles to the left of the chart. We've recovered more vector candles earlier on today. We are coming into the peak formation. Things look like they are favoring higher prices right now. If I believe that it's going to continue to go up, I will place a trade on that basis. I'm not going to sit and wait for the trade to develop into a trade and then take the trade and then I'm losing because I missed out on the trade. And then I close my trade and say, right, I got in wrong. I'm going to leave it now and then come back to the chart and I can see that price has gone completely to the moon from that point. You trade what you see. You look at the chart. It doesn't matter what someone says elsewhere. You go on Bloomberg and they say, oh, Bitcoin is not a storehouse of value or whatever. Okay? Come away from the news. Come away from anyone saying anything when it comes to you deciding on when to trade. All right? Look at these candlesticks. That's where everyone is reflecting their impression of where they think Bitcoin is going to go. And this is what the market maker does. He prides on that information. He knows you respond to it. You see a big red candle on your chart. You think Bitcoin is dropping. Oh my God. No. We know market makers are building longs. It's a little bit difficult, isn't it? How can you go and sit with a group of friends and then say to them, oh yeah, Bitcoin's dropping. Everyone's like, they're all talking about Bitcoin going down, down, down. And you turn around and say, yeah, but that's the market makers buying. They're getting their longs. I'm getting ready to go long. And they look at you and think, are you stupid? Price is dropping. The sellers are in control. How dare you think that you're going to go long? Now imagine that conversation happening with thousands of other people. Well, welcome to liquidity. Those same guys that are selling Bitcoin are the ones that, in order for them to sell, there's the composite man behind buying it. Remember, you can only buy something that someone sells to you. You can only sell something that someone buys from you. That's how the equilibrium appears. One thing happens against another. I'm a baker. That's all I can say. Yeah, Infinex, based on your strategy, my friend, your vector candle's going to take about 10 years to create. LM, let me see. So if market makers always recover their liquidity, why haven't they sent the price down to 17K yet to recover these monthly vectors and reset the market? Who says they are going to yet? Who says they're going to do it now? Who says they need to do it? The principle says that, yes, the vector candles will need to be recovered to be consistent with the basis of the vector candles. Okay? But let's understand something. The market maker can be as irrational as he wants. Look on the monthly time frame. Check this out. We could be in the development of an M formation. So we could get one more hit towards the 60s, come back down. But right now, price is stalling. It's at the 13, near enough at the 13 EMA on the monthly time frame. But you have to understand, you know how long we have to wait for price to come and recover these vector candles? But remember, it only took them 3 weeks to go from 31 all the way up to 58. 3 weeks. By that token, it only took them 3 weeks to go from 58 all the way down to 27, 28. So it isn't going to take them long. When they're ready to send price back down to this zone, they will send it. We will be visible of that. We will see it. They recovered this vector candle, brought price back up. Come back down, recovered this vector, pinned it, came back up. Now what we're seeing is these past 2 months so far have been trading within this zone. That is very important. Okay? Very important that the candles here are trading inside of this previous month. So it's not actually gone anywhere that it hasn't been before. And it's contained in this zone. That's what's really important. Okay? Vector candles at some point will get recovered. All right? But are they ready to recover them yet? It might take another year. It might take another 2 years. Yeah? I mean, look. Up, vector gets recovered. Stopping volume area gets recovered. This gap at 23 right here may get recovered. But you've got 2 pins that stayed and kept containing price within this zone. We've got until Saturday, Sunday night for this candle right here to finish above the 50 EMA. It needs to finish above that point to tell us that this is a rise, retrace, continuation to the upside. That, my friends, is what pattern we are expecting from the weekly time frame. See, perspectives are different. You've got patterns and within patterns and cycles within cycles. All right? It's down to what you decide to trade. Look at the daily. Daily time frame. If you look closer. Below the 50 EMA. 50 EMA is crossed over now the 200 EMA. Okay? You've got the death cross as they call it. But you've got stopping volume 1, stopping volume 2, divergence at the lows. Everybody's feeling a Bitcoin should be going down lower. And guess what? I'm cool if it does. Why? Because I'll just try and grab the next vector candle that it's looking for. Stopping volume again on the 1 hour time frame. I'm going to be ready for Bitcoin to go down. I'm going to be ready for it to go up. This is why I have no bias to what price is. You know? I don't care what price is going to be. All I'm looking for is vector candles. If it was up to me, I wouldn't even have price on this chart. And it's irrelevant. Price is irrelevant. The only time it's important, okay, is when you're trying to understand what the market maker is doing above key notable areas. For example, look at how they behave above the 35k mark. They build their shorts above the 35k zone. Okay, so look, 35k right here. That's the 35k zone. They start building their shorts or continue their shorts above that point, send price above it, and then smash straight through it. 2 vector candles going through the 35k zone. They built their shorts above the highest possible point, above the 35k mark, and then they smash price back down. Now what are they doing? They're building their longs below the 34 mark and trying to come back up. Psychological high, stopping volume, divergence, pins to the low. Not the highs, pins to the low. When they're pinning the lows, they're trying to take the liquidity from the guys trying to go short so that they can use that liquidity to open up their longs and move price to the upside. And remember, guys, this is a short-term day trading strategy that I apply 3 days of the week. I'm only going to expose myself to 3 days of the week, which are the busiest times in the week. Tuesday, Wednesday, and Thursday. Monday and Friday, no interest. And I'm okay with not trading those days. Look, wherever there's a vector candle on any time frame, you can use it. Let's look at the 1 minute time frame. Look at this. Vector 1, 2, recovery. Vector 1, recovery. Vector, recovery. Stopping volume, recovery. Pin, 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 pin. Vector, recovery. Vector, recovery. Vector, recovery. Vectors, vectors, recovery. Come back. You see? Vectors all over the place. Look at that. Vector, vector, up. Vectors to the high. Bring it back down. Vector here. Look at how close the precision is. Look. Vector candle right there. Go across the chart. On its way to getting recovered. Happy days. Look at these. 1, 2, 3, 4, 5. Up it goes. Recovery stops right there. Look at that. Look at the candle stop right there. And it's recovered all the way up to this point here. Happy days. So even down to the smallest time frame, the candles get recovered. But it's the 1 minute time frame. Of course it's going to get recovered. When you're flipping over to the monthly time frame, so much has to happen to get candles recovered on there. So much. 5 minute time frame. Look at that. Smart move up. There we go. Vector candles. Recovered only 50% of it there. Still got more vectors to recover there. Let's see what happens. 50 EMA edging upwards. Trying to break above the 200 EMA. Hit once, hit twice. Third time, it should be breaking through. Holding the zone. Very important that they got notable volume at the lows here. They got busy at this point because they committed guys to go short. And when they get the commitment from those guys, they snap price all the way back up. Where's it going to go next? Well, look what it's doing now. It's trying to break above the 200 EMA. They are slowly shifting. This big green vector candle right here is the big clue. Could they be building shorts at this point to continue lower? Well, we'll wait and see. If you think it's going to continue higher, pay to play. Make the conviction. Because you ain't going to learn this game if you don't put yourself in situations where you are accountable for your entries. Don't wait for someone to say, I'll go long or go short. That's just the worst way to even try and learn. Don't be the person that says, oh, I need to see you do it. Nah, man, you ain't ever going to place a trade. That's the harsh thing about this game, guys. If you're not willing to take responsibility or be accountable for your actions, come away from trading. It's not going to work. All right? Because if you're not going to be accountable for taking a trade, you ain't going to be accountable for money that you're losing. You ain't going to make a decision to say, you know what? I need to cut my losses. I need to get out of this. You know? That's the nature of this game. It's not for the faint-hearted, man. However they dress it up all over social media. It's not an easy game. You'll be tested. You'll be humbled. Trading will make you hate trading before you love it. Everyone comes to the chart with fear. Oh, I've got to make sure that I understand what I'm doing. Yeah, that's great. Great intentions. Fantastic. Love that. Your enthusiasm to wanting to understand absolutely everything is great. But the only way that you can truly understand this game is to spend time learning it by applying it. All right? They say you should avoid swimming with the sharks. Well, until you swim with the sharks, you ain't going to know how to behave when you're swimming with sharks. Already you have the concept of fear in your mind. When you see this game, you know how many people have lost money. You think you're going to lose money. If your first trade is against you and you're losing, you automatically subliminally program yourself to believe that you're not a good trader. So then you start forcing a win. You want to see a win because you think that if you win your first trade, it's a good omen. Omens don't exist in this game. Goodwills don't exist in this game. Your generosity does not exist in this game. Okay? You can be a worse person, you can be the best person. In this game, the only thing that matters is the money that you put in and the price difference between your entry to your exit, if it's profitable or not. That is the only thing that matters in this game. Everything else is chaos and BS. Don't care. It doesn't matter. All right? Like the law of gravity. You're a good person, bad person, stand on top of a building, walk off it, you will drop. Gravity doesn't have any emotions. Neither does the market. The market doesn't care who you are until you put your money down. You are the liquidity. good actor, mate. There's nothing to act. You've been here 5 minutes. I've been here 15 years. Winning my first trade was bad for me. It gave me false confidence. Confidence comes from time and experience. This is it. You know? I'm reading your comments. Is it possible it's going to go from second leg on 15 and also scalping safe for no trade days? No. Well, look, you've answered your own question. Is scalping safe for no trade days? Is scalping safe for no trade days? Let's think about that. No trade days, is it safe to trade? No, it's not, because it's no trade days. Have the commitment to not trade those days. Yeah, I'm 18 with 25 years experience. I'll tell you why it's your story, bruv. Yeah, a lot of people can relate to this. Do you know what? I don't. I actually sit down. You know? And you got some new tracks from your system hack. Nice. Vector candle at the 5-minute time frame on the 200 EMA on the 5-minute time frame. 200 EMA on the 5-minute time frame, which is the 13 EMA, not the 13 EMA. 50 on, no, it's not. What is it? Where 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 is it? What's the 200 EMA? Oh, I hadn't even got it on there. That's a 25. Tino, how do you succeed if you cannot short or use margin? Some of the most successful traders from this system only traded longs. You don't need to go short. If anything, if you only decide to trade a certain direction, your discipline's going to be awesome, because you're not going to get caught up in the chaos of trying to ride a short or a long. You know? Yeah, most people when moon. Jamanda, that's all good. That's all good. What's your opinion on hedging trades to cover both options? Hedging trades is a fantastic strategy. All right. But the key thing to hedging is you need to be in a profitable position first. That's the key thing. Because with the profit that you make on the hedge, if you're in a long and price is rising up, when it's starting to pull back, you open short. You take the profit from the short, okay? Take that and add to another long on the retrace back up from that short. Keep doing that, okay? Keep taking the money from the market maker to the point where the money that you've used to enter the trade has actually been made back and put in your account. You're actually using their liquidity now. Funny thing about hedging, isn't it? I know a person or two that are okay at hedging. They do all right. You know. Is now a good time to buy, Jason? Is now a good time to buy? If you're asking that question, trading's not for you, my friend. And that's the harsh truth. Tino, when Lambo started trading yesterday. I love that. When Honda. When is it for Honda? More like when's it for BMX? I hedge my wife with my mistress. Fair play, bro. You got the right idea. Do you think they're manipulating the market to follow the Wyckoff theory to reel investors in? Great question, Carlos. 90% of the behavior in the chart is based on what the retail trader's trying to translate with his retail trading indicators from the book that he read on Amazon. Here you go. Go and buy yourself a book on Amazon on how to exploit the hardest, easiest way to make money, the most liquid market in the world, the most challenging thing on earth. Just go to Amazon and buy this book, bro. You're sorted. When Lambo. Come on. Really? You're saying to me you're coming into the most liquid market in the world, and Bitcoin, cryptocurrency is not the most liquid market in the world. Forex is. This strategy that we are discussing right now is Forex, not crypto. It's not designed for crypto. I'm applying Forex strategies in crypto. And so far, it's doing pretty well. The Forex market trade turnover is above $6.5 trillion per day. Cryptocurrency gets dwarfed by that. However, can cryptocurrency come up to that point? Of course. Remember, Forex has been going for days, years. All right? But cryptocurrency, we're in the adoptive stages right now. Volume and Wyckoff don't fit together. The problem with Wyckoff is time. Wyckoff is all about a pattern. This strategy is about understanding the candlesticks and the time that they appear. Why is it we always pay attention to the New York reversal? Look at this vector candle in the New York session. Bring price down, stop hunt low, rise. Trap the traders, done. It doesn't factor in time. It doesn't factor in the market makers of New York. It doesn't factor in the Brinks box. Yeah? It doesn't factor in the pins to the high, pins to the low. 90% of you look at these little pins and think that the market is rejecting that price because there's no interest. Really? Please. No, that's not what it is. Look at the candles itself. I hate talking in hindsight, but it's the only way that I can help you understand the idea of why this is not a rejection. All right? They start moving price up at this point. Vector candle triggers the moon boy to step in. How does he get him to step in? Nice strong movement up. Well, guess what? The way they got their liquidity was from the shorts that they built over here. They got the short retail trader to go short. They built their longs. They wanted to realize a profit. The retail trader looks at the chart and says, wow, we're coming over the 5 and the 13 EMA. Have you ever heard of rainbow moving averages? Where there's like a ton of moving averages on the chart. There are traders that will trade the 1 EMA, 2, 3, 4, 5, 6, 7, 8, 9, 10, all the way up to 80, 800, you name it. It's on the chart. Every single movement is being watched by one indicator or more. The market maker knows that retail traders use these indicators. That's why they exploit them. Let's look at the classic example of range trading. You get traders that say trade support and resistance points. Here's a level of resistance and here is a level of support. Okay? All you need to do is wait for price to get to that point and trade towards it, or wait till it goes to the resistance point and trade towards that point. If it was ever so simple, because look at it like this. How can this be a support and resistance? True support and resistance if you're having to move it all the time. So you will draw your support, your resistance right there. Okay? So by the token of price, look at this. So by the token of support and resistance, why that concept is flawed. Because if the price comes up to this area and sees it as resistance, hits it twice, yes, you can open shorts. Price drops, they spike the low. Everyone's committed to going short, and then bang, they reverse price back up into the range. Okay? But when it breaks above it, the guys who trade the support and resistance are going to say, wow, this now is new support because it was old resistance. Let's go long. So they hit those orders, bring it back. Hit those orders, bring it back. Shake out the traders. Then those traders are like, yep, this is going to be confirmed support now. Let's go long. They spike the high, commit the traders, and then the traders that are trading on the idea of old support, old resistance becomes new support. Well, look what happened here. They got squashed. That's BS. You want to know what true support and resistance is? You look at the psychological high and low that is set from the start of the week. And that is where we are right now, my friends. And look what price is doing. It's coming away from it. All day today, Bitcoin has been holding at the psychological high. Now, for the people that are new to this stream, the psychological high and low is taking the first high and the first low that is formed at the start of each trading week. And why is that important? Simple. Because the market maker sets the spread for the rest of the week. He sets his intention. Price can do one of two things. It can either trade away from the psychological high to the upside or trade away from the psychological low to the downside. Why is there a green vector candle coming out away from the psychological high? Because they set the intention right here. They favored higher prices, shift out of the zone, use news to get the zone cleared out. Now they've come back to this point. Funnily enough, it's where everything started to consolidate at this point before they shifted out of the zone. Now look what price is doing. Notable volume coming in towards the lows to trigger the retail trader to go short. The retail trader's seen that price has now dropped below moving averages. Okay, there's a death cross on the chart. Oh my God, let's go short. Now you can see price is starting to come back up. Stopping volume. People are saying that they don't want prices down there because it's rejecting it. No, they do want prices. They just tapped the liquidity down there and they've shifted it back up to shake out all the guys who went short. That's what happens there. People translate the candlesticks wrong. People read price wrong. That's why 95% of people lose. Because they're trying to go against the grain. They're trying to go against the business model. And if you don't understand the business model, then that's why you are adding to the percentages of losers. Because you're hitting Amazon. You're getting those books. All right? People trade the chart technically. They don't trade it psychologically because it is psychological. Why do you think price moves up? Because there is liquidity coming in. People are stepping in, buying. But the reason why they are buying is because fear is coming in. They don't want to miss out. And the only way that they can get that buy sorted is if someone's on the other end selling. So that's how price moves. That's how it gets to a certain point. People are fixated with saying Bitcoin should be this price, that price, this price. Well, guess what? Market maker will exploit that. Yes, trading in the zone is in Amazon. Let's not, hold on. Trading in the zone is in Amazon, but it wasn't in Amazon beforehand. All right. So someone put it in Amazon. So I'm not going to count that. Whales are just people with a lot of money. Market makers are market makers. Whales are not market makers. Don't know why people convince themselves that the whales are the guys that move the market. Hell no. Do you think you can buy $1,500 worth of Bitcoin on an exchange? Sorry, 1,500 Bitcoin, and price isn't gonna move up? It's not gonna happen straight away because that will break the market. They can't process an order so much in a split second. Although the turnover in each candle is millions, so that might be a dwarf figure. But when someone talks about Bitcoin and they say that they're going to be, they're buying Bitcoin, like when Elon announced that he had brought Bitcoin, or Tesla brought Bitcoin, we saw the result of that. But that information got released after he brought it. He didn't buy it the same day he declared that he brought it. No way. Market makers do have a lot of money. They are like a business. When you start a business, you need float. You need capital. This is their playground. Anyways, I think I've given you everything that you need for tonight's stream. Okay? I want to thank everyone who's passed through. But just pay attention to the chart. Anything can happen. Right now, we see that the psychological high is now showing support. So all we need to do is wait and see if they do favor higher prices. We will only know when they move price away from this zone. Okay? We are coming towards the weekend. Then we're going to see some really crazy volatility. All right? Our goal is to make sure that we improve the chances of our entries playing out by entering at the most high probability times. That's a Tuesday, Wednesday, Thursday. The reason why the weekend sees a lot of movement, because there's no volume. Of course, there's going to be wild price swings. People confuse that. They get it mixed up. They think, oh, look at the big moves that happen at the weekend. Yeah, the reason they're big moves is because there's no volume there. All right? Right now, we are waiting to see if this zone is going to hold. As long as it holds and moves away, happy days. If not, we will be coming down to this pool of liquidity right here, which will see us at the 31 mark. This stopping volume candle is giving me reason to believe that they do favor higher prices, but we need to wait and see. At what point are we going to determine that it's going to be a valid test of this zone? Because we are in a consolidation point, brought price back down and came straight back up. We need to wait and see what happens. All right? Tokyo is now open. I'm not sat through Tokyo for a long time with you guys, but Tokyo is now open. Let's see what Tokyo brings for us. All right? Let's see what happens. All right? Now, guys, listen. Mad love and respect to all of you. All right? Thank you very much for passing through. Okay? If you are new to the channel, feel free to subscribe. If not, I hope you've taken something of value from this stream. All right? Take care of yourselves, guys. Patrons, I'm going to get these videos over to you tomorrow. They're just taking way too long with Mother's internet. I need to have a word with her, man. I need to sort that out. She just will not entertain Virgin Media. So I'm going to have to pretend. I'm going to have to start my own telecoms company and then actually put my own my own line in. And just call it the Traders Reality Streamline. Okay. All right, and guys, mad love and respect. Trade well, rest well, study over the weekend, take some time out. And just remember, we've got next week. Market ain't gonna go nowhere. Yeah? Mad love and respect to all of you guys. Peace.